Hello and welcome back to the Fail Breakdown channel. First time doing a trade recap in some time. Coming back from the holiday season. Looking forward to getting back into regular trading sessions here next week. But we had quite a bit of action today on Friday, January the 2nd of 2026. I'm going to be looking at a couple of them. I only traded two of them myself, and there was a few more that happened after this. But I'm just going to be looking at firstly the failed breakdown right off the open on Thursday evening at 68.96, and then one shortly after the open of the regular trading hours on Friday morning at 68.21. So quite a couple of interesting things to learn from these trades, I think. Just a reminder, I'm not an expert. I'm just doing my best to convey the method taught by Adam Mancini and his strategy. So take everything I say with a pinch of salt and defer to him for the expert advice. Okay, let's get into the charts. Okay, so here we are on the 4 hour looking at the price action over the holiday period. So we've had the Santa rally where we've just gone in price discovery mode to the upside, and then a period after Christmas where we've been consolidating sideways in a pretty tight range, and then on Wednesday we got, albeit a choppy, but a breakdown of that consolidation zone. And those are really the three different modes that price is operating in at any one time. And the reason I wanted to highlight that is it maybe changes how we approach failed breakdowns, and gives us some different things to look out for. So I'm just bringing in this slide I quickly put together for the purpose of this discussion, which kind of outlines these three different modes. So price discovery to the upside, consolidation, and then price discovery to the downside, which is where we found ourselves in on Wednesday and coming into the open on Thursday evening. And so just a couple of things to note. When we're in this price discovery to the downside, we usually means we've broken down a previously well-established support, which is what we had here at the 69.35. That breakdown short from Adam's newsletter has triggered, and we're moving into some kind of clear air below where we've got a lot of open space to the left-hand side of the chart, and we're looking multiple days back, maybe more than a week back, to find some significant structure to trade around. And in this scenario, I mean, first of all, we obviously need to wait for the state of the mode to move more into the easing. So, we're not knifing down too quickly. And then we're going to look for this confluence between some macro structure and a local smaller failed breakdown. And that's exactly what we got on Thursday evening. So the local failed breakdown itself may not meet the criteria of a significant low, but when we couple it with the macro structure, it gives us an acceptable entry to trade around. And the other thing to note is after we've had a mode 1 red day, which is really what we had on Wednesday, it wasn't clean, but we opened near the high and we closed near the low. So after that type of day, it's often good to look for a trade at the end of the day or after the open in the evening session the next. Obviously, Thursday was a holiday day, so it's somewhat like a weekend. And I think admin actually tweeted out to Adam the similarity between Thursday evening's trade that we're just about to discuss here and a Sunday evening open long. And in this case, we had a small gap up on Sunday evening, not usually an attractive setup to engage in or a situation to engage in, but given what had come before, that is, that's probably the one time to get interested in engaging in a gap up scenario when we've had all that red immediately before it. Okay, so here we are. I've got the 5-minute chart up on the right here now. So the significant low is formed, firstly in the near term, by this Wednesday afternoon bounce from about 97 up to 09, so 18 points. so barely scraping through on its own, but in confluence with this gap from 96 to 00, that gives us a good level to trade around. And Adam, from his newsletter, had the 96 level, looking for a flush and reclaim of that. The first interesting point, I've actually read his newsletter at this point, at this time, so I kind of know what he said in there, but he considered all of this action that happened after the close on Wednesday afternoon as being type 1 acceptance, which structurally it certainly is. For me, I tend to ignore this and never read as much into it. So that's sort of my first takeaway from this one is not to discount this after hours price action. But he certainly read this as type 1 acceptance, and that led to his pretty aggressive entry off the open. Okay, so I'm not actually going to replay this. I'm just going to talk through it. This is now on a 2-minute chart, just so we can kind of see all the rotations up and down. But as mentioned, we'd had, according to Adam, this type 1 acceptance already established, and then right off the open we gap up from we gapped up to 98, so reclaimed the 96 level straight away. Adam actually said he got in on the first minute around 00, so he's in on this calendar. On this candle right here, which I was a little surprised to see that, but maybe not, given that he considered all this to be acceptance. I hadn't really kind of acknowledged that structure there. So yeah, he jumped in straight away a minute or so after the open, around the 00 mark. For me, I think there was a couple other different ways to play this. We got, after this type 1 acceptance, we got the sort of type 2 dip and then hold and lift, so there was potential to get in here. Personally, given the volatility was so low and as expected, evening open on a holiday session, I decided to wait for applied the non-acceptance protocol on top of kind of layering it on top of the type 2 acceptance that had occurred off the open. So that was my danger zone 5-point box here off the 96, giving me 901. So then I entered right around 615. So where was that on this chart? Yeah, so right around when we lifted up here. So yeah, this was my entry here, but I think there was a couple of different entries. Obviously we had Adam here. I think there was a potential to get in on the lift here if you weren't worried about waiting for the danger zone to clear. For me, I gave it about 5 minutes holding above the danger zone and took my entry there. So that was that. Yeah, a couple of interesting points on that one, I think. And just to summarize, we got the macro FBD confluence with this near-term low, the reclaim of that. We have the type 1 acceptance after hours, and then the small gap up, not necessarily an ideal thing to trade, but on the back of a red day on Wednesday, that's probably the one time to engage in a gap up scenario. So that was that ran up the levels nicely. And what we got then, I think it ran up to 34 overnight. Let me get back over here. Yeah, okay, so we got up to 38 overnight. But the first thing to notice when waking up in the morning, obviously, hopefully we had runners for those who did engage, but for those who didn't, there was a nice shelf here at 21, which we identified in the Discord, and a number of us traded. But we had several touches here. 1, 2, this is on a 15-minute chart. 3, kind of 4 touches, and this whole block lasted about 4 hours. So a clear shelf that we can look to trade a sweep or a flush and reclaim of. One thing I noticed from reading the recap was actually Adam kind of identified this 25 as a level. Also, I didn't really spot or acknowledge this, I have to be honest. But he kind of drew this up in the newsletter as being another shelf, and that you would want to wait for that to clear. Um, I'll be honest, I was totally oblivious to that. I hadn't really kind of seen that structure there. But with this one, we got pretty nice, clean Type 1 acceptance, which is my favorite type of acceptance if I had to choose. So here's the level here at 6921. You can see here clearly we're getting the, excuse me, nice scary flush where we're flushing here at more than 3/4 of a point. The purple I think indicates more than like a point and a half a minute. So we're flushing pretty rapidly, and then we get these nice swings of acceptance, and I find Type 1 just the easiest type of acceptance to read. This is our significant level. Why is that gone so small? This is our significant level. We flush it aggressively, return to it, dip, and then return again. And here, as we push through, the entry is quite simple. It ran multiple levels for a nice couple of trades to start off the year, so that was great. I think that's all for this recap. At this point, I had to check out, so I didn't catch any of the action that followed. But by the looks of it, there were quite a number of failed breakdowns today, maybe even as many as 6 for the various different levels. I mean, these are the Adams levels from his newsletter, so obviously we've had another failed breakdown of the 96. Easy to cherry pick, but down here at 72, we had the controlled sell bid. I never do those personally, but flushing quite aggressively, and then the selling pressure just subsides. And then you can potentially bid that level directly here when you kind of see that selling curling off like this. Oh, we've gone big. And then we got a double dip of that as well. I don't know why that's changing size. So then we got the failed breakdown of this low as well, and then the double dip to finish off the day. So multiple setups beyond the 2 that I've talked about. One here, one here, and certainly one here with this controlled sell bid in there as well. So a busy day. Wasn't really expecting that for a Friday. Nice to have the volatility back for sure, and looking forward to more of it next week. Okay, I'm sure it's gone on long enough. I've been rambling a little bit. I'll try to keep these shorter in the future, but hope that was helpful to everyone, and I'll catch you in the Discord. Cheers. Bye.